What's up, everybody? It is Saturday, June 11th, late morning here in Eastern Time. I was watching the Cavs Golden State game last night, hoping the Cavs could make it interesting, at least. But I'm not a fan of either team. But I was hoping we would get a good series, not to be. So, but we've got stocks to talk about, so it's time for the market analysis and market review over weekend edition. So it was an interesting day Friday. Obviously we had quite a bit of a down day here on heavy volume, so it was interesting. We did manage to close above 210, but just barely, and it did spend significant time below 210. But also, if you'll notice, we ended up, it did look like we had some, let me just pull this, it looks like we did have some support here in this little pocket area here over these last days on June 2nd through the 7th or something like that. It looks like it built up some support, and that coincides with the recent top back here on March 20th. So we were able, it wasn't totally bearish. We did maintain some level here. So I believe what the market was responding to was this new Brexit poll which came out. So if you don't know what Brexit is, it's the UK or Britain deciding to leave the European Union, or to leave the euro, so they're part of that. And the latest poll said 55% leave, 45% stay. So, and they vote June 23rd. So obviously that went from being a minor concern to a major concern, and that'll shake up the financial markets and the financial system a little bit if they decide to leave. So I think that was a large part of what happened. Obviously, we're also in new highs, so some selling pressure is to be expected. We didn't see a whole lot on the way up, and so in my opinion, this is actually a little bit healthy that we should get a pullback. So looking at the SPY, I would expect I would expect a normal pullback if it goes lower, which it looks like it wants to. It doesn't have to, but it looks like it wants to. I could see it going and touching the 50-day moving average and spending some time down there, similar to how it did back here in May. So in May we saw it tango with the 50-day. It actually broke down and then hit this support level down here at around, what was that, around 203, and hold there. So we could go back and enter the top of that range here at 207. We could go back down and see that tango with the 50-day and then move higher, depending, although there's not a whole lot of time for the Brexit vote, so it'll be interesting to see how it responds to that one and if that does happen as far as they decide to leave. If they don't, I would expect a relief rally. The other thing that we've got is obviously this idea of a rate hike, which I think they're discounting at this point. The fact that there's going to be a rate hike in the near future for the US Fed, and I think if Brexit happens, that will probably push that back indefinitely, but we will have to see. So if we look, at this view, we're saying, well, it's likely that it could pull back to the 50-day, even below down to 207, before, and possibly down to 206, 205 in the middle of this support range before it catches a bid higher. It could go all the way down to 204 at that. There's some significant support. And if we break through that, then there's the 200-day. But I think the most likely scenario is down to the 50-day, which would be 207.50, 208, and then the 207 area. If we look at the other indexes, so the NASDAQ obviously not as bullish, almost reached its 50-day. It's got the 200-day pretty close underneath of it, so this supports that view as well, that it would go down to the 200-day. And if we look at the Russell, obviously the Russell had been very constructive of late. It's got this recent high back at the end of April, so falling down to there and even down into this support area here makes some sense. It could go even lower and touch its 50-day. All of that makes sense with the current view of the SPY hitting down to its 50-day or down into this 207 area, 206-ish area, depending on how deep that goes. Now, that's not saying we can't go higher from here and just reverse what happened, but I don't think that's necessarily likely. So along with this, we saw the dollar go much higher, and I think this was a straight up safe haven play. If Brexit were to happen, obviously both the pound and the euro would be affected negatively, and so the dollar is going to catch a bid along with that. Now, what was interesting with that was gold. So we saw gold also have a bid higher. So this kind of shows you that this is purely a safe haven play. Money moving out of European markets and into gold and the US dollar into cash and other safe haven assets like gold. So I think gold catches a bid here. It continues higher. I've been talking about how I thought it drifted higher to test all-time highs, especially with the Brexit vote and everything. I still think that's likely. It depends on how much of a bid the US dollar makes, but the first target I said was 120, 121. It surpassed that, and so I think it goes to and tests these recent highs, not all-time highs, but these recent highs up in the 124 area. With that, it depends. It's interesting to see. It'll depend how much the dollar of a bid the dollar makes. I think the dollar upswing will be tempered by the fact that there is no rate hike, and so we might see some oscillation here. And up into this area, this high on May 31st, we may go back there or near that area, but I don't necessarily see the dollar breaking out unless there was unless the Fed decided to do a rate hike in like July or something like that. So with all that being said, oil took a dip, still above its 200-day moving average, still looks constructive. It is in a support. It is at the top of a support range right now. If we were to break through that, it has the 50-day, but I would not. I think it's very possible that it could go down to its 50-day moving average. It has spent a lot of time above the 200-day, and so I would like to see it stay above to remain constructive. But if, with all these fears, I see the oil could go down further. I don't know. It depends on what production news there is and so forth. But obviously, with a stronger dollar, that's going to be difficult on commodities, especially ones that aren't viewed as safe havens. So the oil is not a safe haven commodity like precious metals, and so it might see it might see some pullback. Now, interesting. So depending on how short-lived this is, it'll be interesting to see how we open on Monday. If we open considerably lower, if we end up actually even touching the 50-day on the SPY on Monday, I could see us bouncing from there throughout the rest of the week. Or we could go lower, but then catch a bid and it be a two-sided battle, and then we end up higher for the week. A lot of different scenarios. It depends on how all this fleshes out. But with all that being said, this was the market analysis. On Monday, I'll be posting a few trades. God bless, good luck, great trading.